Good afternoon. Welcome to 25 Minutes with Cap, where each month we discuss different topics in the specialty insurance space. Just a reminder, the content of this webinar is the property of CapSpecialty and is for informational purposes only. You're not permitted to republish, share, or quote from this webinar without the prior written consent of CapSpecialty, which can be obtained by contacting marketing@capspecialty.com. If you have questions through the session, feel free to enter them into the chat and we'll do our best to answer them. So today I'm excited to have Chris Cavallaro joining us. Chris is the executive chairman at ARC Excess and Surplus. Chris, thanks for joining us.
Thank you for having me. I appreciate it. And I look forward to hopefully an enjoyable 25 minutes.
Awesome. So Chris, you started at AIG in 1974 as an underwriter, left in 1986 as a senior vice president to start a wholesale brokerage. Tell us the ARC origin story.
Oh, I worked for 12 years and change with AIG. I was friends with a fellow by the name of Albert Salvatico, the A in ARC, and I was very good friends with Rich Firestein. And I had probably run my course at AIG. I was running the management and professional liability divisions at the time. The motto at AIG at the time, under the management then, not now, was the beatings will continue until morale improves. Anyway, so after 12 and a half years of that, I determined I wanted to move on. Al Salvatico was friends with Rich Firestein, as I was friends with Rich Firestein. He was one of my first friends at AIG. And we came together, and Rich was a wholesale broker. He felt that we can add a new dynamic and specialize in management and professional liability. And I believe we were the first wholesale broker to specialize in those product lines. And that's the way we started out. And now 38 years later, we'll do $1.1 billion in premium this year, doing wholesale brokering and some direct accounts, but very few. But those direct accounts are basically dictated by our parent, Stone Point Capital.
So that's an awesome growth story. So in 1986, what was the alternative? So what were the retailers doing? Were they going to generalists? Was stuff just not being placed efficiently or competitively enough?
Well, the market, if you thought the market was bad the last 3 years, you don't have an understanding of what the market was in 86. There was only 3 markets writing new business. We got to remember the insurance industry was technically bankrupt. I mean, you can go down the line. They were all undercapitalized. They were writing 4 to 5 to 1. Now most insurance companies are not even writing 1 to 1 the surplus. So, I mean, at that time, it was a very dire market. And I will say that Richie was especially good at getting things done with a newer market at the time. Great American had entered into the market, and they didn't have the baggage that AIG and Chubb had of the 10 prior years of very soft market, which was causing significant losses to those carriers who predated Great American. So Great American was a new, fresh market. It's like the new markets that come in today. No different. They don't have the baggage of the last 10 years. So they're able to come in and do things hopefully more efficiently, maybe smarter, maybe not as smart. I don't know. I won't make that value judgment. That value judgment will be made by the P&L at the end of the day, right?
Sure.
But the problem with our business is, your P&L is only determined about 7 to 9 years later. So it's a difficult business to manage, especially with all the new exposures coming at you, which you didn't expect or never anticipated. I will say that. Even though I was told once a good underwriter anticipates, he doesn't react. I had that screaming at me once by a man by the name of MRG. And I think there might have been an expletive in there as well, but maybe not.
When you only had 3 markets to be able to place the business with, what was the market size at that point? I mean, now you're talking.
Oh, the industry, well, things were going 10 times expiring. I mean, literally, I'm not exaggerating.
Right.
Accounts were going 10 times expiring. I mean, I'll give you how crazy the market was. Like Exxon, the primary 100 million was going for maybe $180,000 to $200,000 a year it was on a 3-year policy on annual installments.
That's amazing.
So, I mean, those premiums went from $180,000 to 1.2 million or 1.3 million. Now, premiums are much higher today. The base is much higher.
Right.
I mean, I remember, by the way, your father wrote this account when he was with CNA, Wisconsin Power and Light.
Yeah.
This is probably 1985, right before I left. $25 million primary limit, $100,000 retention, premium prepaid, 3 years prepaid with 3 separate $25 million limits, $25,000. I paid more for my auto insurance than Wisconsin Power on a rate per million basis, than Wisconsin Power and Light was paying for their D&O insurance. That's how inexpensive the insurance was at the time. So there's been a metamorphosis over the last 37 years, 38 years, of where rates have become much more in line to the exposure, but the exposure has grown too. I mean, it used to be $1 million or $2 million would get you to a motion to dismiss, through a motion to dismiss on a securities case. Now it's $7 to $10 million. So, I mean, the cost of everything is going through the roof.
So do you remember this Wisconsin Power and Light because it was by far the cheapest account written?
Well, there was one cheaper, but no, I was your father. I was pissed at him. That's why. I couldn't believe it. I said, when you go do the numbers, it's $333 a million per year. When you do the numbers, it's $8,000 a year for a $25 million limit. Yes, the market was very inexpensive and it was very competitive, and it taught you a lot. I mean, it taught you a lot about doing the right things, and it taught you a lot about when you did the wrong things, what happens to you. And this business, in my opinion, is all about trying to do the right thing, trying to stay within yourself, whether you're being a broker or an underwriter, creating whatever underwriting model you want to present to the market and staying within it. And my job as a broker is staying within my brokering model and make sure to deliver the market in the best possible way, and also understanding the market as to who does what within the market and who does it well, and present those underwriters to my client and make sure my client understands that. I mean, I love this business. I think the world of it. I think you have to always be thinking outside the box and within the box at the same time. You know, I think someone once said to me, you know, you have to reinvent yourself every year in this business. And I think today you have to reinvent yourself every 90 days. It's such a fluid business.
Right. You know, one of the tough things about being a wholesale broker is it could be so transactional. You know, the flow is so substantial. It's not a lot of time. Everyone wants everything yesterday. A cheap price can be super compelling. How do you differentiate?
Well, we have a different business model as a wholesale broker. We try not to be, listen, we're involved in transactional business. I'd be lying to you if I said we weren't, but that's not the vast majority of the business we're involved in. We try to partner with our retail brokers. We don't do a lot of business with the alphabet brokers at all, and we never have, because we knew we'd be more of a commodity to them than a partner to them. And I'm not being negative toward them. It's their business. They're allowed to manage it any way they damn please. But we knew that if we dealt with more of the mid-tier to regional brokers, that they'd have more respect for our relationship, hold on to our relationship longer, and want to work with us. And we work directly with the client and the retailer. We're not hidden behind the curtain as the big boys want their wholesalers to have no involvement with the risk, other than getting the quote.
Is that right?
I'm sorry.
Is that right? That depending on the retailer, they will allow for a certain level of relationship from the wholesaler?
I mean, I think most of our retailers that we do business with encourage it and want it, because we have a claims advocacy group that I think is second to none. It costs us a heck of a lot of money to have that advocacy group there. And we have 4 fine individuals there who advocate on behalf of our client. And most of our retail brokers don't have the expertise to advocate from a claims perspective on behalf of the client. And we've invested a lot of money in that. And that's our value add. Our value added is those services that I don't believe other people provide as competently and as professionally as we do. Now, maybe my competitors will disagree with me, but
Sure.
that's our business model. And by the way, it's been our business model forever. It's not something new. We've had this business model for 38 years, and it was something that Al, Rich, and myself, and my brother Mike, and Rob Crescido, and other people at the firm have always felt that that's the best way to distinguish us from others. And in some ways we may be better, in some ways we may not be as good. I mean, that's for others to decide, not for me to decide.
So you talked about the business, your business, and the business model has been pretty similar since you started it. What about the business has changed?
Well, the business has become more complex. Certainly, it's become more legal opinions have come, and also there's new products that have come into the business. Sure. Your father was one of the originators of tying D&O and EPLI together at Executive Risk. I mean, he was the first one. I mean, Chubb had the product, but they didn't sell it that way. Right. I mean, Executive Risk was the first carrier to go out there and say, hey, this is a combined product. You're going to buy EPLI insurance, and we're going to throw in the D&O, because at that time, private D&O insurance had very little claims incident at the time. Today, it's a different story.
Yeah.
It's actually flipped. I think the D&O losses are probably bigger than EPLI losses in that product line today, or commensurate with. I think in the past, 80% of those losses were driven on that product were driven from the EPLI side, not the D&O side. And now today it's more like 50-50 or 60-40. I guess it depends on the book of business you have.
You go ahead.
No, I'm just saying innovative things like EPLI insurance, cyber insurance, certainly, outside directorship liability insurance, and I'm probably missing some others. But, the PGL, PL, combined package insurance, I mean, those things are all out there. I mean, media insurance.
Do you sell a lot of that, PLGL?
On certain small lines, it makes a lot of sense. Yeah. Because one is tied to the other. I mean, and not if you're writing a major corporation, you don't want to write PLGL. But if you're writing a small lines company that does online training, something like that, the GLPL would make sense.
Yeah. No, we think about that sometimes, and we never found that there was, people always wanted to buy a separate policy.
Well, the Hiscox sells that a lot online direct. Of course, and doesn't help the brokers out. But anyway, we'll leave that alone. But that's a product that they sell, and when you're talking about very small risks, it's all about price. They want a certificate of insurance and price, and maybe they're not buying the words, because you buy the words and the capital and behind the words, and the authenticity of the people behind those words as well. There are different markets who act in claims in different ways, and I won't get into how I'm going to rate them, even though Aon does a rating of the claims handling of all the carriers each year, and I think they actually do a pretty good job, in fairness to them. But I think a good broker understands the authenticity of the underwriter and the claim staff behind them as to, are they a good match for this client? And also, sometimes you say, is my client a good match for this company as well? So, I mean, it's not a simple decision of just getting the cheapest price. I think if you do your job right, you find the correct underwriter to match with the correct risk, make sure everyone understands what the true risks are. And that's something that some brokers do a great job of, and some brokers don't. And, I always say, the more information I can give to the underwriter, the more they're going to understand the risk, the better they're going to be able to handle that risk and hopefully assume that risk. Let's face it, it's all risk assumptions. What you're doing is taking liability from one side of the ledger and putting it onto the insurance company side of the ledger. And hopefully the words of the insurance company and whatever you negotiate as a broker on behalf of your client match up. I mean, that's my job. Listen, and sometimes it's not perfect, by the way. Sometimes the client says, well, I want 100% coverage. And you have to say to the client, well, no, the policy doesn't provide 100% of the coverage of what's being alleged here. It provides a good portion of it, but a portion it doesn't. And that's the job of a broker too, to make sure that everyone understands what the loss presents to the carrier, how the carrier is responding, are they responding reasonably and fair? And to know the carrier and their claims people as to how they ought to work with, because a lot of times in claims, it's a negotiated settlement. Let's face it, it's a negotiation between us advocating on behalf of the insured advocating on behalf of themselves, and the carrier and their counsel advocating on behalf of themselves. And hopefully you can come to a very fair and reasonable conclusion. And where everyone, there was a guy by the name of Elton Dealman. The only one who probably knows the Elton Dealman on this webinar is probably your dad if he's on. And he worked for Johnson and Higgins. He was the nicest man on face of the earth. He ran their claims area.
Yeah.
Jimmy Wallace used to work for him, and some people probably remember Jimmy Wallace if they're on here. And he used to say, the only fair deal is where everyone walks away reasonably unhappy.
Right.
That was his line, and I've used it 100,000 times in the last 40 years.
Right. You talked about how the products have gotten more complex, the business has gotten more complex. How about the transaction? How is being a broker? You started out in the 80s with a specialty business, but how has it changed?
It's faster. I mean, everything's lightning fast. I mean, I used to, as an underwriter, have to write out my quotes by hand.
Right.
Send them to a telex room. There
Right.
was no typewriters or anything. It had to go to a telex room. It got sent by the telex people in the next day or two. The only anachronism I could say about that is in a telex keyboard, there's no ampersand. So that's why it's D-A-N-D-O, Danda. That's why there's no ampersand. There's an A there, Danda. They put A-N-D, Danda. So you used to send out your quotes by telex, and then you used to have runners. There's no such thing as a runner anymore. There were runners that came to your office with binders and you signed. And half the time the binders were wrong and you had to change them by hand. It was a mess. So, but things are so much more faster and more efficient, by the way. I mean,
so if you have a 12-1, when are you starting to work on the thing?
Well, you used to, hopefully the broker did a good job and got the information to you by no later than 10:15.
Okay.
I mean, but I used to pump out 20, 25 quotes a day.
Right.
I mean, I talked to underwriters today, they pump out 3 to 4.
Right.
I mean, when I was an underwriter, they put a stack of stuff on your desk and said, I mean, don't get me wrong, we weren't very sophisticated. I mean, okay. We weren't very, assets, liabilities, current ratio, total debt. Can they cover the debt? Do they make money? Good, next, let's quote it.
Well, that was my next question.
That was the quote.
I mean, but do you think that, 3 to 4 versus 20 is pretty different? I mean, do you think people were just grinding more, or do you think it was just less sophisticated?
I think it's both.
Yeah.
I think it's both. I don't think it's one. I think it's a mixture of everything. When I got there, I got hired for $9,000. I want you to say that was my annual salary. That wasn't my expense account. That was my salary. Okay. And I said to myself, if I ever made $25,000 a year, I'd be the richest man on the face of the earth.
Right.
I think I was wrong on that one. But anyway, but it was, I love the business. And I love the people in this business. That's the other thing, that 96% of the people or thereabouts, I made the number up, but the vast majority of the business are good people that you like and enjoy and want to help. And I want to help. I mean, first thing, I want to help them because that's my job to help.
Right.
But more importantly, I want to help them because I like them.
Sure. Do people still talk on the phone?
I do.
Why?
Most people avoid the phone because, and I get upset. And I said, why are you ignoring me? I'm not going to yell at you. I'm going to yell at you for not calling me. I'm not going to yell at you for talking to me.
Yeah.
And also, you can, I think, as a broker or an underwriter, impart what your concerns are. Either way. I mean, I used to say no and make brokers cry when I was an underwriter because I made them understand. I made them understand what my concerns were. And sometimes a broker would say to me, Chris, give me anything. I don't give a damn. I said, I'll give you something, but I don't want you to sell it because it'll hurt you. And I don't want to hurt you. Because
Right.
give me something so it'll make this client go away because they're driving me crazy. And I would do it. And I
Right.
would say, but don't sell it because they're going to wind up suing you because they have no coverage.
Right.
But in honesty, the other thing is that there's a great line that was said to me by Rich Vecchi of all people. Tell the truth and it's part of your past. Tell a lie and it's going to be part of your future.
Right.
And honesty in this business means so much. I mean, listen, there may be people out there who don't like me,
Right.
and that's fine. But there's no one who's going to say I've been dishonest. No one in this business will ever say I've been dishonest. If anything, I've been maybe too direct. And that I would say to everybody, just tell them where you are and let them understand I'm here because of these reasons. And this is all I can do. And I hope you understand that. And I think and I'll give CapSpecialty some credit. You've really defined yourself well as underwriters as to your space and your underwriting box. Some underwriters do that well, and some underwriters don't do that well. And it's incumbent upon the underwriter to make the broker understand, here's the business we want, and here's the business we actively are going to pursue. And also say, this is business we really can't do, so don't waste your time. The problem is in a very competitive market, people go outside of their box and then brokers get upset because you've told us you aren't doing this business and now you are. So you put the broker in a box because he didn't go to you because he felt this is something you wouldn't underwrite to. I mean, CapSpecialty has defined its box really well. You're a small to medium-sized company, writing small to medium-sized business and some excess business on the bigger stuff, but you're not writing a $40 billion market cap company's primary D&O. That's not your space.
Right.
I mean, and that's fine. And I think people understand that, appreciate it, and respect you as a market because they understand, number one, you have great security behind you. And number two, that you're pretty definable and understandable as to what you're going to do each and every day. So, that gives brokers an understanding, okay, they're a good market for these 3 or 6 risks, whatever the number of risks are.
Right.
And they're not a good market for these other 5.
Right. Do you see, you talked about people expanding outside of what they say they're going to do. Are you seeing that in this market today?
Not yet, but we will.
Right?
Not yet, but we will. I mean, I'm not saying everyone's going to do it. The only thing that concerns me about this market is there's so many new MGAs who are not owned by insurance companies. If they're owned by an insurance company, I don't think it's going to be much of an issue. But there's so many of these insurtechs who are looking to throw business on the books, and they think AI is our artificial intelligence is going to teach us how to underwrite and underwrite effectively. The only thing that teaches you how to underwrite effectively is knowing the client in some manner and knowing what their exposures are, what you're insuring to, and how ethical they are, and for them to know how ethical you are. And by the way, the only thing that brings that to the table is a good broker or a good underwriter with experience as to the risks in front of them and the types of situations and claims they may have been involved in and how each side handled it. And I think there's nothing, and I know because I'm 70 years old, it sounds great because I have all this experience, but you don't have to be 70 to understand this. You could be 33 and understand this. But knowing more, being exposed to more is going to enhance your knowledge of the business and your knowledge of the insureds out there and allow you to be a more effective broker, a more effective underwriter, more effective reinsurance broker, whatever the case may be.
Yeah. But how does that, that kind of puts you in a tricky spot. So you see a company maybe doing something that's too aggressive, or you believe it's too aggressive. I mean, but you're a broker and you want to be end run. So
no, you have to take advantage of it. I'm not saying, listen, you have to present, you can present it to a client and also say that, here's a very aggressive quote. You may want to take advantage of it. We don't necessarily agree that you should move forward with this very aggressive quote because we don't think it's going to be there next year.
Sure.
I've said that in my
Sure.
my career,
Sure.
but I've presented it. You can't hide it, of course.
Yeah.
Then I'd be in cuffs, and I'm 70, and I don't feel like spending the last 15 years of my life in prison.
Yeah. Well, hey, this was awesome. Thank you very much. For those who joined us, thanks. And we'll have this up probably in the next day or so. But Chris, really appreciate the time.
Adam, thank you very much. And for those who missed 25 minutes of the soccer game, I apologize to you. And for those who are watching the soccer game on their phones during this, let me know if we scored a goal.
All right.
Thank you very much.
Thanks. See ya.
Thank you, Adam. And I appreciate you guys allowing me to be part of this. I really do. Thank you. Have a great day.